Welcome back then. Let's get straight to the next company that's on our radar, Prime Focus. They posted a rather weak set of numbers in the fourth quarter. The company's revenues were lower. The margins as well did see a bit of a disappointment. But let's understand what's the outlook going ahead. We have Mr. Namit Malhotra, the founder, executive chairman and global CEO, who joins us. Hi, Namit. Thanks so much for joining in. Namit, what went wrong in the last year? And if you could tell us, could we see some recovery in FY19? Yeah.
So I don't think from a company standpoint we think something gone wrong. I think we look at it as, this is an inherent reality in our business where we fundamentally, first of all, don't track our business on a quarter-on-quarter basis because we are a massive project-run business. And the variability between quarters is not truly
okay, Namit, let's keep it simple then. For the year, you did a 5% growth, correct? For the last year, you did around 2,200 crores approximately. For this year, What kind of a number are you looking at? You know, since you're looking at it on an annual basis.
We don't give guidance.
Single digit, double digit?
More double digit in terms of EBITDA growth.
Okay. And what will be driving this EBITDA growth?
I think, as we continue to expand our infrastructure and capabilities across India, and we opened up a new facility in Montreal, that's going to continue to drive more revenue and hence more profitability because the execution backend is going to be in India.
So realistically, single-digit revenue growth like FY18, but double-digit margin growth, right? EBITDA growth.
Yeah.
Okay.
Namit, before we get back to your operational performance, what's going on in terms of your finance cost? For the fourth quarter, it did spike up. Now, I remember speaking to you sometime in 2017 on this show itself, and you were telling us about how in the next couple of years, we'll see some deleveraging. So give us a sense of what is the debt in your books, what rate are you borrowing at, and can we hope for some debt, reduction in FY19 or in FY20? Will we finally start seeing some debt reduction?
Yes, I think there is obviously, the finance charges as are currently reported under the new accounting standards. They take into account, various different one-time charges also that are grouped together as part of the cost. I think our overall cost of borrowing has been coming down, as we've said earlier, because we have obviously moved to a more dollar balance sheet as that's where the revenues are. Our consolidated gross debt is about 1650 crores.
Okay.
Net debt is about 1550.
Okay. And your borrowing rate?
Average borrowing rate, I think, is about 8.5%.
Earlier it was what? More than 9%?
Yeah, it was over 10% because at that point we had most of our debt out of India and much lesser internationally.
Okay. Of this gross debt of 1650 crore, what is the foreign currency debt or the dollar debt?
I think it's safe to say about 1,000 crores is about approximately.
What about your debtor days right now or your unbilled revenues?
I think they tend to be pretty consistent and it stays normally within the 60-day mark.
Okay, but in terms of rupee crores? How much would it be? Your unbilled revenues?
I think it would be, I can get you the exact number, but I think it's that's sort of within a very comfortable range.
Okay, you are also approved issue of debt securities of, 500 crores. So that will add to your debt. What is the plan?
No, so I don't think that's, there's no specific, plan to increase any debt. I think these are normal procedural approvals we take. There are going to be some capacity build-outs that will happen. It will not be to the extent that's currently been tabled.
Okay.
So that's going to be nominal.
So Namit, you don't have plans to, take your debt higher from current levels. Do you have plans of reducing your debt? Could you clarify that?
Yes,
because that is a big trigger for your stock. And also you were saying that most of your debt is dollar denominated. Now the rupee has become weak, right? So will you have to pay more interest?
No, but most of our income and profits also come from.
So that hedges itself. That hedges itself.
Automatically. That automatically.
Excellent.
Hedges.
What about debt reduction?
I think.
Yeah.
I think we're squarely focused on actually making sure that our leverage obviously starts to come down, and that is sort of being contemplated from clearly driving greater efficiencies in our margins, which we will see play out. And we had also announced that there is an equity investment which from the promoter side has come in, which is all going down towards debt reduction.
How much will the debt come down by?
Over the
10%?
next 24 months.
Over the next 24 months. Give us a number.
Over the next 24 months, the target is to reduce the debt at least by about 500 crores.
500 crores. Okay. And Namit, final question from my end. Your promoter holding, a lot of it is pledged. Any plans of, releasing the pledge there? And where is it pledged? Because your stock now is at around 85 rupees. I remember at one point of time it had gone to more than 130 rupees. So just a quick question on that front.
Yes, I think most of the pledges, frankly, have been coming off. I think as we made a transition from a lot of the Indian banks to the international side, there are a few of those transitions that are left. As soon as that is done, which we are hoping to see happen in the next quarter or two, we will see that a lot of those pledges will further be not just reduced, but actually removed. And, and I think it should be, again, in a very comfortable space overall.
Okay. Thank you, Mr. Malhotra, for joining in. In news coming in, Fortis Healthcare